Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices making a huge move this week, albeit not the biggest of the year. Fifth biggest week over week move we've seen in gold as we sort of saw that technical breakout. Everything was pointing towards bearish signals lower, everything was pointing towards lower prices. It seemed the rising dollar and rising interest rates were going to continue to sort of cripple gold buyers, and lo and behold, something came out of the woodwork. It's called risk. And the offsetting of risk, we saw gold buyers come back and buy gold with both hands. So we saw a big move. We got to up north of 1220. I think it would have been even bigger if we could have gotten north of 1225 and held up there, but we did see a slight pullback. So we're hovering right around the 1220 level on Friday afternoon. And that is going to be significant because any feeding on this that we've seen, any pushes higher that we see will certainly start to gain some more momentum after the fact that we saw the big sell-off going back to April. And the dollar today, while it was a little bit lower week over week, the dollar really held its bullish momentum and its bullish technical formation. So the dollar isn't going to be the cause, it wasn't the cause really for the big rally in gold. It wasn't the cause for the fact that gold stayed up here a day after it rallied, and it wasn't the cause for the fact that we've seen a lot of risk off or riskless assets being bought late in the week. So the dollar holding its own as gold prices rally. And lastly, let's look at the positioning. As we went into this week, we saw speculators at their most short going back to 2001. So you're talking about a 17-year gap between when we've been this short in the gold market, the speculators anyway, and they are likely the ones who got caught on the wrong side of this trade and were buyers. And that big move may have been the ones who took us over the top, because it seemed to me that gold made a big move, made a big spike higher, and then it continued. So right now, speculators are likely flat, if not long. We'll find that out later this afternoon. And going into next week, it'll be interesting because we do have FOMC minutes next week. And will the Fed continue with its hawkish tone? Will the Fed continue to throw out speakers that are going to suggest that rates are going higher and the economy is moving right along? And it seems to me that gold prices are kind of ignoring that right now, with the idea that there are still trade risks out there. There are still credit risks out there. We do still have risks to the economy here, and maybe the Fed is near being finished with their rate hike cycle. Perhaps 3 to 3.5% where the Fed wants to be. Maybe that's an overshoot at this point. But gold prices made a big move this week higher, erasing some of that downward momentum and likely seeing bullish momentum going forward. But we have to get through those FOMC minutes next Wednesday. This is Todd Colvin coming to you from the floor of the CME Group.